Morning, folks. Here at PFL, we're trying something fun. This is our first podcast ever, and hopefully we'll give you a nice start to your week. It'll be casual. We'll tell you what we think we know. Please like us, and we'll keep coming back. At PFL, I don't know if you noticed on our reports, we have a weekly saying we like to come out with and keeps everything positive, but this week's saying is from Thomas Jefferson. Thomas said as follows: I find the harder that I work, the more luck I seem to have. And that makes a lot of sense to me. The harder we work, the more we dig and the more opportunities that come our way. So we wish that upon the viewers throughout this week, and we're hopeful that everyone has a great week. We all know we are in crazy times, folks, and the fundamentals have been very difficult to ascertain and change daily. We will, at PFL, do our best to keep you informed, not only daily, weekly. When you call in, we'll tell you what we know as we know it. The good news is rail traffic along North American routes is improving, and we're only down 4.9% year over year. This is a big number, but we're filling the gap. It's our belief that rail car storage is peaking. More cars are being taken out of service and scrapped. Not as many cars are getting built, and demand for certain car types in storage will increase. We are in transition mode as unwanted cars are being turned to owners and lessors. Some over-leveraged companies have simply not been able to wait it out. See PFL's latest storage report. As far as U.S. unemployment goes, it continues to be a headwind for economic recovery. A new program that many of our listeners and readers are probably unaware of is the Pandemic Employment Assistance Program, which added 1 million folks last week in addition to the regular unemployment claims, leaving 2.3 million people last week alone looking for help. Consumers' confidence as we get through this recovery is paramount, as each of us know. 70% of U.S. economic activity depends on it. More details in today's rail report. Markets are up and poised to open higher this morning, with Dow futures up roughly 126 points. The last I looked, oil is down roughly 85 cents a barrel on demand destruction amid the Chinese outbreaks, particularly here in the U.S., Chinese virus outbreaks, that is. Florida had its biggest day over the weekend of 15,000 new cases. Some tailwinds for rail that we're seeing. Could a back-end resurgence be a possibility? The Baffle pipeline was ordered to shut down last Tuesday. An appeal for a stay was denied by the judge. What is this world coming to, folks? Shutting down a pipeline that has been operating for 3 years. That's a clear signal to me and the market that you don't want to invest in pipelines and infrastructure here in the United States. Another possible headwind for crude by rail is crude by rail in Canada. It's getting closer, believe it or not, folks. The basis closed strong on Friday, minus $7.95 a barrel against WTI. As many of you may know, 1 million barrels a day of Canadian production was shut in vis-a-vis COVID-19 energy destruction. Producers are bringing production back online. In an interesting move, Cenovus, mega Canadian oil sands producer, loaded crude on a vessel in British Columbia and is making its way through the Panama Canal and over to Earnings Refinery on Canada's East Coast. They say it's a one-off deal. Maybe it's a practice run. Who knows? More to come on that, but I personally found that of great interest. We're not building enough replacement cars, as I mentioned, so expect, as we move forward in today's environment, what we like to call as opportunity pockets. So more to come. Tune into PFL, and we're seeing some opportunity pockets, in particular as it relates to wood chip cars and some of these other specialty car types that just don't seem available, and we're approaching end of life on a lot of these cars. Some headwinds for crude that we see: continued implementation of PRMS. Coal is dead, folks. Despite warmer weather, coal in April represented just 15% of U.S. electrical generation. It used to be over 55%. In the week to come, expect continued COVID cases to be reported worldwide. World's economies will not shut down again. At least that's our belief. We have been there, done that, and there is no appetite for the world to go down that path again. We are going to follow the Swedish model and a herd immunity approach until a vaccine is developed. Costco over the weekend issued nationwide mask wearing at all their stores. Expect more retailers to follow suit. We're in a war, folks, against the virus, and we're going to get out there and fight it the best way we can. Despite the underlying fundamentals in equity markets, we're going to see the market continue to rise. You can't fight the Fed's liquidity. There may be a day of reckoning at some point. We don't see that right now, and there's too much money being thrown at the market for it to go down. Rig count in the U.S. will continue to deteriorate slowly. We've had a rapid decline in rig count across the nation, and we're getting close to a bottom. Oil looks like it wants to move higher. OPEC is meeting this week to talk about easing cuts. In other news, China announced sanctions over the weekend against some U.S. officials, including our senator here in Florida, Marco Rubio, and Ted Cruz, in retaliation of U.S. sanctions soon to be announced against China's Communist Party. Well, that's all, folks. We hope you have a great, safe week. We'll see you next Monday. PFL has been extremely active in storage and all related railcar activities. Make sure to check out our just posted reports at www.pflpetroleum.com or call PFL to troubleshoot any questions or concerns you may have at 239-390-2885. Thank you very much, and I'm Curtis Chandler.